Hello and welcome back to the Financial Freedom Show. In today's episode, we're going to review my portfolio performance over the past week, as well as go over the difference between JEPI and SCHD, and which one is the better for the long term and the short term. We will compare both and see what we can find out about each. So without further ado, let's get into today's video. So as you can see, my portfolio is down slightly this week. The gains in this portfolio have somewhat decreased over the past week as the market went down after the interest rate increase. That's going to be expected. We're just going to stay the course no matter what happens in the coming couple of weeks. We have a really long-term perspective with this portfolio, so short-term decreases like this mean nothing to us. We're going to continue adding to the portfolio, and over time we're just going to see an increase in value no matter what happens over the short term. So far this week, my portfolio is down $500. As you can see, that's about 1% with the money weighted return. I just recently received a dividend from SCHD. That dividend was a total of $136.08. That was just earned earlier this week. And then with that, I reinvested back into SCHD. So I continued to increase my position. Let's take a look at my SCHD holding. My current average share price is $70.96, and I have almost 200 shares. Over the short term, my goal is to get this up to 500 shares. So I'll continue to add to this portfolio, and I will continue to see dividend growth over the long term. So continuing with my position in SCHD, we're going to take a look today at JEPI and SCHD to see which is better suited for your portfolio, based on your investment objectives. So without further ado, let's get into checking out which is better, SCHD or JEPI. We will use this dividend calculator to see what your investment would be like over the long term in both SCHD and JEPI. So basically, let's take a look at JEPI. If we have an average share price of $54 and we have an investment amount of $1,000 and we hold it for 40 years, that investment is expected a dividend yield of 10% and an increase in share price of 7% annually if it tracks the S&P with DRIP activated, so dividend reinvestment. Let's just say a 0% tax rate for this case. And if we calculate, so let's take a look over the long term for 40 years of holding period. Your end balance will be $533,868, and that's a total return of 53,000%, which is crazy. Your yield on cost will go up to 5,300%. And then if we just look at this over time, basically you can see the increase in the value of your portfolio all the way up to 500,000. Your annual dividend will come out to be $45,629, and that is for a value overall of $533,000. At the end, you'll own 603 shares, and that's with just investing $1,000 and not putting anything else in and just letting it go over the course of 40 years. And this is the power of compound investing. It's going to greatly increase your position size over the course of the long term. So if we take a look at SCHD in comparison, let's say a share price of $75. Let's just say our investment amount is $1,000, just like before. and our holding period is 40 years. Our expected dividend yield is lower, it's 3%. Let's say the annual dividend increase is 5%, which is actually lower than what SCHD has been over the past 10 years. And let's say the annual share price increase is still 7%, and we have a 0% tax rate with DRIP. Calculate our returns. You're going to see over the long term, if you have a 5% annual dividend increase with SCHD, your end balance is going to be $431,000, which is actually lower than what JEPI was at the end of 40 years. You're going to see a yield on cost of 9,000%, and your total annual dividend at the end is going to be $71,623. That is actually higher than what JEPI was. Your dividends are going to be paying out quite a bit more than what JEPI was at the end, which is pretty interesting based on the fact that the value is lower. Your total share count is going to be 323 shares. And yeah, so as you can see over the long term, JEPI is actually somehow better than a SCHD. But this does not factor in the tax rate. If you actually factored in taxes for this, SCHD would be better over the long term. But if you are investing in a Roth IRA, it's probably better to invest in JEPI actually over the long run to get a higher portfolio balance. So it's basically based on whatever your situation is. If you're in the shorter term, I would recommend JEPI. If you're more in the longer term and you're not anywhere close to retirement yet, I would suggest SCHD. It's really up to you. So that is the difference between SCHD and JEPI. I hope you guys enjoyed this video. I will continue to keep you updated on my portfolio's performance in the coming weeks. And I will definitely still be investing in both SCHD and JEPI in order to diversify a little bit more. I hope you guys enjoyed the video. Please let me know in the comments down below what you guys are doing. Are you investing in SCHD or JEPI? And I will see you next time. Thanks for watching.